Hi everyone, welcome to the CA classroom. Today we will be discussing a topic called preparation of financial statements. To understand this topic, let us have a small background. Section 128 of the Companies Act talks about books of accounts. It says every company has to prepare books of accounts like cash book, sales book, purchase book, etc. Using those books of accounts, end of the year, such company prepares financial statements which will be circulated to the members of the company. Such a provision is mentioned in section 129. Section 2 subsection 40 of the Companies Act defines what is a financial statement. Financial statements include balance sheet, profit and loss account, cash flow statement, explanatory notes, and statement of changes in equity. In your intermediate syllabus, you will be asked to prepare balance sheet or profit and loss account and cash flow statement. Today in the video, we will be discussing the format for balance sheet and profit and loss account. Cash flow statement will be discussed in AS3. Now, Companies Act provides a format for the balance sheet and profit and loss account in Schedule 3 of the Companies Act. Now we will discuss the format for balance sheet. In the previous section, we had seen background for the financial statements. Now let us see the format for balance sheet. Traditionally, you prepare the balance sheet in the T format, writing the assets over here, share capital over here, and the liabilities over here. And you used to tally your balance sheet. However, the new format has everything in a vertical form. This is the liability side of balance sheet. The new format has first shareholders funds. Your share capital will go into shareholders funds. Then your liabilities is classified into non-current liabilities and current liabilities. After this, you will write the total here and you will proceed below this for the asset side. First, let us discuss the liabilities. The format has first a column for particulars to write the items over here. Then you have a small column called notes to accounts, because what value we write here is the total values. Breakup will be given in the notes to accounts. And then you write your current year values and previous year values. For most of the sums in ICAI books, we will be required only to fill your current year values. Under shareholders funds, we have three items. One is share capital, second is reserves and surplus, and third is money received against share warrants. Now, what are these? Under share capital, the value you write here will only be the paid up share capital, total of the company, total of equity plus preference shares. In the notes to accounts, you will prepare a table, a small table giving the breakup. What breakups? First you will write what is the authorized share capital, fill the values. Authorized, issued, subscribed will be filled. Then you will write paid up share capital and fill the values. You will also give certain additional information like if company has issued any bonus shares, rights shares in the last 5 years. You will give certain additional information. If there is any shareholder who is holding more than 5% of share capital, such information will be provided in the notes to accounts, a detailed breakup of the share capital. The total of the paid up share capital will only come in my balance sheet. Next, for reserves and surplus. Reserves include various reserves like general reserve, securities premium, CRR, etc. For each reserve, I will have a separate table and the table will have the following information. First, I will write the opening balance of the reserve. Next, I will write if there are any additions in the current year in this reserve. Next, I will write if there are any deletions in the current year. And the fourth item will be the closing values. Similarly for securities premium, similarly for CRR and all other reserves, total of this will come in my reserves and surplus. What is money received against share warrants? This is a small item. ESOP, if any money is received against share warrants during the vesting period, this will come here. But most of the sums do not have this in the exam. Before this, there is one more bucket over here, but it is not tested in exams mostly, called share application money pending allotment. Share application money pending allotment. It is nothing but, let us assume company issues shares on 1st of March and the allotment happens on 1st of April. Now, until the allotment happens, this money will be shown as share application money pending allotment. Now, this is about shareholders' funds. Next, let us move into non-current liabilities and current liabilities. What are current liabilities? Current liabilities are those items which are expected to be settled within the financial year of 12 months. Non-current liabilities are those items which are not your current liabilities. In the previous section, we had discussed the shareholders' funds. Now let us see what are non-current liabilities and current liabilities. Non-current and current liabilities have 4 points each. The first item in non-current liabilities is long-term borrowings. Long-term borrowings. And the first item in current liabilities is short-term borrowings. What is long-term borrowings? Long-term borrowings are those borrowings which are made for more than 1 year period. Bank loan for 10 years, debentures, all these comes under long-term borrowings. Short-term borrowings as borrowings which is less than 1 year. For example, if company borrows in 2000 and is supposed to repay in 2020, then in the year 2020, such a long-term borrowing will become short-term borrowing because it is repayable in the current year. The second item in non-current liability is deferred tax liability, which you will be discussing in AS 22. Second item in current liabilities is trade payables. What is trade payables? Trade payables includes all your creditors, bills payable, etc. For trade payables, you need to show an important disclosure where if any payable is there pending for MSME, micro, small and medium enterprises, for more than 6 months, then such a disclosure has to be made in your financial statements. Reason being, MSME require funds for business. You cannot hold their funds by not making the payment to. The third item is other non-current liabilities, and the third item here is other current liabilities. What comes here? Under other current liabilities, salary payable, rent payable will come in this. Other non-current liabilities are those liabilities where repayment is due only after 12 months. The last item in both non-current and current liabilities is long-term provisions, and here it is short-term provisions. What comes in short-term provisions? Provision for income tax, provision for bad and doubtful debts, etc. come here. Long-term provisions will be provision for gratuity, etc. This is the template format for your liability section of your balance sheet. Remember that the order is very important and you should not change it. And only the final values will come here and the breakup will come in your notes to accounts. Now we have completed the liability side of balance sheet. Let us proceed to the asset side of the balance sheet. Asset side of the balance sheet will continue from here. After a total of liabilities, we will continue with the asset side of the balance sheet. In the previous section, we have discussed the format for liability side of the balance sheet. Now let us look at the asset side. In asset side, there are only two buckets: current assets, non-current assets. What is a current asset? Current asset means any asset which is realizable within the operating cycle. What do you mean by operating cycle? the time required for raw materials to convert to cash. Meaning, raw materials is converted to finished goods, and again finished goods is converted to debtors and debtors to cash, or any asset which is realizable within the current accounting period. Non-current asset is an asset which is not a current asset. Now let us look at the items in the non-current asset. Under non-current assets, the first item we have is property, plant and equipment, PPE. AS10, property, plant and equipment. Earlier this was called fixed assets. During your school days and all that, it's fixed assets. Now it is called property, plant and equipment. So why the change? Just like how horizontal format is changed to vertical, reason for this is also same. Why is horizontal format changed to vertical? Because for comparability, globally they are using the vertical format, and hence we have also moved towards a vertical format. Similarly, globally fixed assets is called property, plant and equipment, and hence it is called PPE, property, plant and equipment. Only name change, rest is the same. Under this we have 4 items. First is tangible assets. Second is intangible assets. Third is capital work in progress. And the fourth one is intangibles under development. Intangibles under development. What is this? Tangible assets and intangible assets, all of you know. Example of tangible assets: land and building, plant and machinery, vehicles, furniture and fittings. How to present this in the notes? You have to write all the asset names, then write gross block, accumulated depreciation, and then net block. Fill the values. The final net block total, this total net block will go to your balance sheet. Similarly for intangible, same format. Instead of accumulated depreciation, it will be amortization, and here you will have patents, goodwill, etc. What is capital work in progress? Let's say L&T is doing construction of a building which is taking around 5 years. Until the asset becomes a tangible asset, until I start charging depreciation, during the construction phase, it is a capital work in progress. What is intangible asset under development? For example, say you want to develop a patent for yourself. Patent development will not take 1 or 2 days, it will take years together, 5 to 10 years. All the expenditure you incur for developing the patent, if it is allowed to be capitalized as per standard on intangible assets, then you will show it under intangibles under development. For example, you are testing a prototype. That expense, instead of debiting the P&L, you will debit intangibles under development if the standard of intangibles allows for the same. We had completed discussing on property, plant and equipment. The second item in the balance sheet is non-current investment, also known as long-term investments. Sir, what is this? See, I am X Limited and I am buying 100 shares in Reliance and I want to keep those shares for the next 5 years. That investment by me, what entry will I pass for buying shares? Investment in shares account debit to bank. Those investments will come under my non-current investments. Your trial balance will have investment in shares, investment in debentures, all those will come here. Third one is deferred tax asset. Liabilities, we saw deferred tax liability, here deferred tax asset. Will both come? No. Any one only will come. Fourth, long-term loans and advances. What do you mean by this? Let's say company is giving loan to another company. Possible. Company is giving advance to suppliers. Possible. If such loans and advances are for more than a period of 12 months, it will come under long-term loans and advances. Last one is other non-current assets. Other non-current assets. Anything which doesn't fall in the first four items will come under your other non-current assets. Now let us discuss the items in current assets. In the previous section, we had discussed exhaustively about non-current assets. Now let us discuss in current assets. Current assets has 6 items. The first one is current investments. Current investments are known as short-term investments. Let's say you are buying shares for investing for a short period, that will come under your current investments. Period less than 12 months. Second is your inventories, nothing but your closing stock. Third is trade receivables. And fourth is cash and cash equivalents. What is this? Look at the order. When you manufacture, first inventory is ready and then it becomes trade receivables once you make credit sale, and once the debtor makes payment, you get cash and cash equivalents. Earlier you used to call it debtor, now the term is trade receivables. All your bills receivable etc. will come under this. Closing stock value, trade receivables value, all your cash and cash equivalents will come under this. Next one is short term loans and advances. Let us say company is giving employee loans for 6 months, employee advance for 3 months. All those short term loans and advances will come under this. And the last item is other current assets. Example, prepaid asset will come under your other current asset. Any asset not falling in these 5 buckets will come under your other current assets. So it is important to know the format. Order is very important. Please do not change the order. Sir, how do I give numbering? Each question you can give numbering as you wish, but continue number. Number which starts with your balance sheet will proceed to your profit and loss account. Now sir, in one sum, short-term loans and advances is not there. Should I show in the format? It is suggestible to show in the format and write amount as 0. But if you are not having time in the exam, skip this, write 4 and then go to, this will become number 5. Similarly for your liabilities, similarly for your profit and loss statement. In the previous section, we had discussed the format of balance sheet. Now let us discuss the format of profit and loss account. Traditionally, how did you prepare trading and P&L account? There was a T format. There used to be opening stock, purchases, gross profit, then sales, closing stock. Gross profit used to be transferred here. You will write your other income like rent, interest, other expenses and compute net profit. Now what we will do, we will shift from a traditional horizontal format to a vertical format, where first we will write the income, next we will write the expense. All your sales, your main operational turnover will come under the first bucket, under income, first item, revenue from operations. All your other income like rent, interest will come under other income. Now, what comes under other income or revenue from operations is subjective. For example, a company involved in rental business, rental income for them will be revenue from operations. However, a company involved in manufacturing business, if they have any rental income, that will come under other income. So all your credit side income will be classified under revenue from operations and other income. Then you will do a total in the vertical column. Next we will move into expenses. Under expenses, we have first item, cost of materials consumed. If your company is a manufacturing company, all the purchases and any directly related to purchase expenses like consumables etc. will come under cost of materials consumed, your raw materials. Next, second item is purchase of stock in trade. Let's take example of a trading concern, supermarket. They buy goods and then they sell goods. So all those purchases will come under purchase of stock in trade. Next is changes in inventory. We will discuss this in the last. The next item is employee cost. What is employee cost? Any expense related to employees, salary expense, employee travel, employee entertainment expense, gratuity, bonus, all these will come under employee cost. What is finance cost? Finance cost will have any interest on borrowings, interest on debentures, all finance related cost will come under finance cost. Next is your depreciation and amortization. Depreciation on tangible assets for current year, amortization on intangible assets for current year will come under the bucket depreciation and amortization. All other expenses, rent, electricity, stationery expense, cleaning expenses, all other expenses will come under other expenses. Only write the total amount here. Other expenses might have 10, 15, 20 groupings. Show the breakup in your notes. Write the note number and show the breakup in your notes. Write here only the totals. For each item, write only the total. Breakup will come in your notes to accounts. Now let us discuss what is this changes in inventory. In the previous section, we had discussed the format of profit and loss account. Here, it is important to note, unlike your old format, like where you had a trading and P&L account, there is no such breakup. There is only one thing called profit and loss account. It is known as profit and loss statement. Now, changes in inventory. Let us take example from your trading account using numbers and fill the numbers here. Let's say my opening stock of raw materials is 5, opening stock of work in progress is 10, and opening stock of finished goods is 15. Similarly, let's say my closing stock of raw materials is 15, closing stock of work in progress is 10, and closing stock of finished goods is 5. Let us take item by item to see how it impacts my gross profit. If my opening stock of raw materials is 5 and closing stock is 15, because of this change, my gross profit will increase by 15 minus 5, which is 10. Hence, impact of raw material stock is increase in profit by rupees 10. So, under raw materials, I will write 10. However, this is under expense. This is an increase in income. Hence, I will write this in bracket. Next, work in progress. Opening stock is 10. Closing stock is also 10. Is there any impact on the profit? No. Hence, work in progress impact on gross profit is 0. Because of change in inventory of work in progress, impact on profit is 0. Coming to finished goods. Opening stock is 15. Closing stock is 5. Because of this impact change, my gross profit will reduce by 10. It is basically like reduction in gross profit by 10. This impact of 10 will come over here. Should I put brackets? No, because this finished goods is reducing my profit. Therefore, under expenses, I will write 10. So, it is very important that you use your trial balance, identify opening and closing stock, and the differences are plotted here. Now we have completed the format for balance sheet and profit and loss account. How do you solve a sum in exam? Take the trial balance. The very first step is to identify all the items in trial balance and plot them here. Trial balance might have salary cost, employee travel cost, employee entertainment cost. You need to group all the three under employee cost. So you need to do such a grouping and plot the values in the income statement and balance sheet and prepare both your income statement and the balance sheet. So very important, please memorize the format. Format of balance sheet has liability side, asset side. Liability side starts with shareholders funds, under which you have share capital, reserves and surplus, money received against share warrants. Non-current liabilities, current liabilities. long-term borrowings, short-term borrowings, deferred tax liability, trade payables, other non-current liabilities, current liabilities, long-term provisions, short-term provisions. Coming to assets, non-current assets, current assets. Under non-current assets, you have first property, plant and equipment, under which 4 points: tangible assets, intangible assets, capital work in progress, intangibles under development. Next you will have non-current investments, deferred tax asset, long-term loans and advances and other non-current assets. Last you will write current assets. Current assets as current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and lastly other current assets. Going to P&L, you have first income, revenue from operations, other income, total of income, then expenses. First is cost of material consumed, second purchase of stock in trade, third will be change in inventory, raw materials, work in progress, finished goods. Next is your employee cost, finance cost, depreciation and amortization and other expenses. Format is very important, follow that.